How's it going, guys? Welcome back to mentfx, and in this video we are going to be looking at the part 2 to the top down that we did actually and just released yesterday about 8 hours ago on the step-by-step top down, which we did on silver. We're going to look at how it played out and how you had an ability to get in using the top down analysis we did. Additionally, congratulations again to 90.5 for winning a free mentorship position. For anyone that still wants a chance to win it, make sure you check out this video right here and leave a comment on it, as that is where the raffle will be rolled on. So right now we are going to rerun it for the second spot winner. We're going to grab the YouTube comments the same way, and we're going to roll it for the second winner of the 4 free spots for a month in the mentfx mentorship. So if you do win, just make sure you reach out to me over Telegram or Instagram with the links in my description, and just show me that it's your YouTube channel, and I'll make sure that you are added to the group. So we'll go ahead and find this. About 1,100 comments now, so an extra 100 since last time. Make sure you go and drop comments on this specific video. Make sure you like it, subscribe, and we will roll it for the next winner. So the second winner of a free spot is Cherotic Purity. Congratulations for winning. Please drop a message to me in any of the things below, and I'll be happy to have you added to the group as well. So as you recall from the analysis we did, if you have not seen this yet, go and watch the part 1 of the video. We were looking at this from a top-down perspective, looking to anticipate the bearish pressure from these points here, and that's what we're seeing currently happen over the last few weeks, especially as the weak hands in the market are manipulated out of the market and price begins to break down, thereby signaling that we most likely can expect a bearish delivery of price action in the next few weeks. Now, if you all remember, this position was not tapped into when we had our first top down, and we were expecting price to reach up into it. And part of that expectation was actually looking at this last demand zone right here, the last down move before the up move, to have price tap into it, accumulate, and then take off to the top side in here, where we can finally start to expect some profit taking and some potential distributions to then continue on the lower push down, right? And we do this every weekend in the mentorship. So the ones of you that have won it, congratulations, and the ones of you that have not, you have the ability to join it right here at launchpass.com/mentfx/mentfx. I will not offer it anywhere else. Now, taking a look at this, we had this area denoted, which we also had an imbalance at the time of, if you all recall. Now, as price came to tap into that area, as you all remember, tapping into that area left behind this very, very large imbalance, which we expected price would make its way up to fill. Now, in the move upwards to come and fill it, we were actually also expecting, if you remember, this last down move before the up move to be filled, which you remember a wick on a higher time frame is, on a lower time frame, in this case it's another wick, but on a lower time frame, as you keep getting lower and lower, let's get down to a 5-minute, it is oftentimes a demand zone. So here you can see that the move happens so quickly that even on a 5-minute, it is still a wick. But as we get lower and lower on this overall push down, and we get lower, you can see that the main push down that began to grab the liquidity that rested here, 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 and most importantly here and here. So this is like a little channel of liquidity that was forming of some sort. The last move down, which came from here, which was that wick, is what we basically expected to come get filled. Now, again, you could have went and refined that to the last unmitigated zones in here, and you could have refined that even lower if you wanted to. However, we were just expecting that price would want to come tap it and then continue significantly higher. Now, as a result of that expectation, if we go back to the 30-minute chart, we can also take a look at the Discord really quickly. As you can see, price did indeed trade down into it. So let's go and find where exactly it traded down into it. So that's this move right here, as you can see. This is the move that came to trade right into it, and actually on a lower time frame provided us an accumulation in this overall area right here. At this point, when this candle right here traded higher and started to break structure, which you'll see on a 15-minute and a 5-minute. So remember, time frames are not there for the purpose of actual time. Time frames are there for you to be able to see orders, how those orders are transferred, how structure is instilled and put into the market, and how you can use that to potentially be a part of the move. And again, being part of that move can come from a number of entry methods and ways to be involved. Some people could get involved at the opens, some people down here, some people off of the confirmations of other demand zones, some people off the reaccumulations off those confirmations, and so on and so forth. So there's a multitude of opportunities to get involved in once you have confirmation off a certain area. So again, if you all recall from the last video, again, check it out if you haven't, because we do the top down entirely in its entirety here. You have this last down move before the up move, and that's where we expected price to come and trade into. As it trades into it, again, it begins to create liquidity, and similarly, you have weak hands in the market being taken out by the strong hands of the market, and those strong hands are accumulating all their positions as per all this liquidity that is taken out, and then that is shifted with a real institutional shift to the top side, which is seen with the break of these lower time frame structures at this wick, this structure, this structure, this structure, and most importantly, this structure. So we know that there is a real institutional shift in this, right? That's something that I might talk about in the future videos, but institutional shifts are very different from normal breaks of market structure. Now, as we get those institutional shifts and breaks of structure, we can then take our eyes to the last down move before the up move. If we go back to the Discord really quickly, you can see that this is that shift on that 2-minute chart. So let's go and open this on a 2 minute so you guys can all see the same thing. Here is that same 2-minute shift higher, which again, we are just allowing ourselves to see with more price action, thereby showing us that there's a real shift among and beyond all the structure that was put in on this pullback, right? That also was part of the liquidations of all the lows in here that were created. So if we go and look at the Discord, price came right into it, broke significantly higher, and as it came lower, we had now decided on, as you can see the arrows I've pinpointed here, the buys that could occur here off of fractal accumulations continue significantly higher, with partials again being preset with the light blue lines, or for price to come and trade back down into here and buy up again the same way into the partial lines, which are all in line with the analysis that we had released in the first part of this top down, which is seen in this video right here, the step-by-step top down, how to trade smart money concepts, 1 out of the 4 mentorship giveaways. So make sure you check that out if you want to see, apologies for the quality, if you want to see how we were led to this overall bias, right? If you take a look at all of this, you will see that same bias, looking for this to tap in and go higher. If we keep moving along here and actually go and find our entries, 2K, here we go. Let's just move across here. If we went onto a lower time frame, that'd be really nice to see. Forgot exactly where it is that I looked at it. So here's that last down move, and I'm pretty sure I outline it here. So let's mute that really quickly. Price to trade. Here we go. So we're looking for price to actually trade down, as you can see, and we pinpointed that last down move before the up move, expecting price to come, as you can see at that alert, to come and tap into there, which we'll be looking at right there, and then continue significantly higher off of the institutional breaks, right? So what we had is we did indeed have price come. Let's go and look at that on a 15-minute chart. Is we did indeed have that area, as you can see. It came right into it as we expected, taking all those lows, and then price broke higher. And after that, there was actually a fractal accumulation that I saw here that I wanted to be a part of. And honestly, this only rode to the first partial, which you remember denoted by these light blue lines, and was then stopped to break even. However, the main move, as denoted in this, where was it? In this image right here, right? So this was that first potential entry, and the real entry came from this large accumulation that happened here, because there's fractal accumulations constantly occurring even inside price, right? That's how you can be a day trader if you want to trade every single move of a schematic. So what we had is that last down move before the up move, and if you notice, this move here on its own is actually quite a large move. Now, that does not mean that you are not fully valid, as is to take the open of it at the wick, or even the open of it at the body, and use that as a potential area where you can look to enter with the stop loss just below the lows, or just below the lows of where the liquidity was, right? And then take that to higher prices as we expected. That would have been a 1 to 4.59, or if you took the open of it, you've now refined it to 1 to 6.13, or if you went and took the 50% of it, which is actually something that I did. I have my own mini entry protocol for getting into stuff like this, but if you took the 50% of this, you would see that there's a really nice entry level right there. So it's actually under the entry that I wanted, which would have given you an even better entry. Or of course, you can take the 50% of the body, which is also a valid way to look at a potential mitigation, because the 50% of the body actually is denoting to you where most orders happened. So there's a very good chance that the 50% of the body is where price may want to head. Or, of course, like I say, there's so many entry criteria that you can have that if you went ahead and refined the inside area of this, which could look something along the lines of this, if you went into the 5 minute and took a look at where exactly price could have came, your last down moves before the up moves were pretty much found in this right here. So that's the candle you could have used. If we got a little bit lower, potentially you had the chance of, you can see how everything here is relatively mitigated. So it'd be hard to go and just refine a random one of these, right? You'd be taking off a potential of being tapped in. The probability of being tapped in would be lower if you had gone to refine even the last low. So we could still keep it to the last down move. If we kept getting lower, you can see that everything's pretty much filled. If you even looked at the 15-second, everything is pretty much filled with the exception of this mini imbalance that exists right here off of this last down move. So if you wanted to, the last possible refinement could be this right here, with the expectation that price could come tap in and maybe fill a little bit of this area here. But even then, you might have missed it. So let's take a look if that might have held or might have worked. So we can now exit this replay mode. And as you can see, if you went and over refined that position, you would have been missing out on this trade. So sometimes it's better, especially if you're using a higher time frame to spot your Wyckoff. If you're using that higher time frame, it's better sometimes to ask yourself, where could the bulk of the orders be, and recognize that in this overall push down, which is seen by this last down move right here, right, this is at a very, very cheap level. So if we went and looked at this from a low to a high, this is literally within the 80% fib levels or whatever you want to call it. So it's very, very low. Usually the 0.5 of an overall level is where it might come for the last mitigation. Hence why you see this wick that came to tap it really quickly and then continue to scuttle up to the top side. Now, even though this got tapped and then ran a good solid, whatever this was, 1 to 11, if you went right to the completion right here of the area where we were expecting price to tap into, a really nice one to 9.77, you also have to recognize that based on the way you manage this, that 1 to 9.77 is not actually 9.77%, right? Based on the way we manage, again, you can see the blue lines preset here, and you can see those drawn in way before the entry even occurred right here. So after the entry, there was the blue line here, here, and then up here. So these are all the partial levels, and you can see the completion of it was looked to be exited at that open of where we expected price to potentially distribute. So as a result, you have the first partial, which actually results in about 3.76 RR, which, as you all understand, is actually 3.76 over 2. So you only secure for yourself, in this case, about 1.88 RR. So it's about 1.88. Then your next level of partialing actually occurs at 1 to 6.74. And again, that 6.74 is now partialed twice since we partialed previously. So that only goes to secure you 1.68 RR, right? And the third area, which was the completion of the entire trade, which is secured at 9.8, is actually 9.8 over the first partial, the second partial, and now the third partial, which is actually equivalent to 1.225, right? So about 1.22. And again, we can factor some commissions in a second. But overall, if we take a look at these and we add them all up, the overall position that ran here on the 1 to 9, based on how you held this, right? If you held it my way of partialing, then it's much less of an RR than if you just ran it up. And again, either way works. You just need to find what works for you. If we add up this overall RR, it comes out to 4.78 on the overall trade if you had managed it in this way, right? And that also means that if it did come up here to this distribution that occurred previously and stopped and then continued way lower, we would have still secured a nice 3% instead of potentially being taken out of break even entirely, right? And of course, after the first partial is met, you're already break even. Even honestly, after this break of structure happened here, it was pretty break even, and I was expecting for price to maybe make one more move down, as you can see by this level and this level, right back into here before continuing higher, or here to go higher. Neither of those things happened, which is fine. It just means that we can't add any re-entries to our position, and instead we'll take the move to the top side. So again, check out the step 1, the part 1 of the top down for silver that I did literally a few days ago, right here, where we went and did a top down analyzing the market and expecting a certain move, seeing that we wanted to see prices break significantly higher because of the fact that we had areas to be met up here. And now you can see that those areas are actually being met, and the way we came to meet those areas, as you can see, it's wicking the area right now, and the way we came to meet those areas up there was through the confirmation of the lower time frames, the lower time frame areas, inefficiencies, and the move of fair pricing to unfair pricing, and the fulfillment of liquidity, of liquidity, inefficiencies, hence the certain number of partials and liquidity, right? And there's that markup that you had on silver as per the video that we had released yesterday to you guys, and hopefully that made some sense. Now, again, congrats to you for winning the mentorship. Please drop a message to me in Telegram or on Instagram, just proving that this is your account. Again, that's 2 out of the 4 announced. If you still want a chance to win a spot for a month in the private mentorship, make sure you leave a comment and a hashtag mentfx in this specific video in the comments. And I will see you guys in the next one. Thank you so much for watching.